You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means it is time once again for another episode of everyone's favorite options educational program. Yep, it's time for Options Boot Camp, what the cool kids call the old OBC. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which all you crazy options folk are mainlining these days. Remember, if you like what you hear, this, anything else on the network, throw a like, a star, a comment. And if you're not listening to the full network, what the heck? You clearly don't like options. We got nearly a dozen programs waiting for you. The second you hit that button, the second you hit join, it's all there. Subscribe, whatever your platform calls it out there these days. Speaking of joining, if you want to go above and beyond, you want to get some extra content in your ear holes above and beyond the regular network, theoptionsinsider.com/pro. Great pro Q&As, options oddities every week for some awesome trades. If you're not going to pick up some trading ideas and listening to that show, I don't know what you're doing out there. Giveaways, the whole 9 yards, early access. I'm going down to OIC. In fact, as you're listening to this on the on-demand side next week, I will be down at the Options Industry Conference grilling all of the thought leaders in the world of options. That stuff's going to be hitting the pro side as well. Our pro folks can always suggest questions and comments and guests as well. We love you all out there. Theoptionsinsider.com/pro. Speaking of people that we love or maybe have mixed feelings about, I am also joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P, welcome back to the show, sir.
It is always good to be on the show, Mark.
That didn't sound enthusiastic, sir. I don't know. I don't know if I can truly trust that sentiment, sir. We'll see. We'll see what our listeners have in store. We'll see what they have to say as we keep on rolling, a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments, your insights. A lot of you writing in with great topics and suggestions for episodes of Options Bootcamp you'd like to see. Hard to believe we've been doing it for a decade. There still are options topics we haven't covered, but that is clearly the case. Just look at the brouhaha that we kicked off with the zero-sum option stuff. In fact, more people have weighed in on that on the network. Since then, we had Brian Overby, the options guy, chiming in on our Pro Q&A yesterday about that. Other folks chiming in on this. It's become the options debate of the day, the week, the month, the year. Everyone's obsessed with it now. So you never know what's going to resonate. And you never know what you folks are going to send us. That's why. So you have a question, you have a topic. You know, we're good folks here. If it's interesting, we'll discuss it here. Hit us up, questions@theoptionsinsider.com. Add options on most major social media platforms. Of course, if you're on the Pro, you can use the members hotline or just type it into the live. That all works there as well. Dan, this week's episode topic actually was suggested by a listener. He goes by the handle OP Surfer. Maybe he's overpowered. He's a really good surfer. Either way, OP Surfer says, Mark, thank you for all you and parentheses and Dan do on the OBC to educate. Well, you're welcome, OP Surfer. We're here for you folks at the end of the day. He says, oh, well, I don't like this next part. He says, to be upfront, Dan is usually my favorite. and I'm just waiting for the day that he's got a witty comeback for you. Well, all right, first off, Dan, I'm not reading any more of this letter because clearly this guy is a man of poor taste and we have to delete all of this. Producers, delete all of this from the record. Now, I'm just kidding. It's okay if you like Dan. There's no accounting for taste at the end of the day. Though I will say, if you're waiting for him to have a witty comeback to me, you're going to be waiting for a long time here on the show. Dan, what do you have to say about this bizarre and completely unearned love that OP Surfer has for you?
Well, as I was pointing out in the last episode, we've got some very, very smart listeners. So this is obviously one of them. So yeah, as far as a witty comeback, I don't know. I'm a very polite sort of fella, which is definitely not always the case. But I try to be polite.
You know, I'm washing my hands of this question, so I'm going to leave it in your capable hands, Mr. Dan, because clearly they prefer you. So I'll let you finish reading the question, and then you can answer it for him, because I'll be off doing something else, because I'm clearly not wanted, sir.
All right. So as the question continues, I'm a recent full-time midlife convert to options trading. I noticed that you did some time as an independent prop firm trader. I just signed up for such a firm, and I think I found a good one. Have you ever done a podcast about retail traders who may want to convert to full-time and perhaps consider working for a prop firm? What are the pros and cons? What are the signs of a good firm versus a scam? Pay me thousands to train you and let you fail. All the best, OP. So, yeah, so that I know we've talked a little bit about it in different segments in the past.
Yeah, I think we have touched on this. So even though I am not wanted, and I'm throwing my own little hissy fit on my own show here, I will go while you're talking. I know we have touched on this in the past. I will go see if I can find the exact episodes, because that's the kind of guy I am, Dan. I rise above the hatred and the vitriol and just the poor taste. And I will go help OP Surfer, even though he clearly has no love for me. So I will go do that while you answer his questions, sir. But yes, we have, I believe, touched on this in the past.
Yeah, but it could be, that could make for an interesting show at some point. So the pros and cons. So there's a couple of, can I just jump into this one, Mark? Do you mind? Or
hey, he wants your opinion. Go for it. I'm just doing my own thing. I'm playing tiddlywinks over here.
So the pros and cons, as far as, well, let me kick this off with a little story. So when I started down on the trading floor, there was one day where I was up in the cafeteria, and this is like, my first couple of months on the trading floor. And I walked past a guy who is some guy that I knew from high school who just really, really liked himself a lot in high school. And he was just one of those guys who, I mean, he wasn't like a bully or anything, but he was just sort of like a cocky kind of person in high school. And, I wasn't. So, I mean, we weren't like mortal enemies, but I was never a fan of this guy. But one day I run into him on the trading floor and he's like, "Oh, you trade down here?" "Oh, yeah, I do." And he's like, "Oh, so who do you trade for?" I was like, "Oh, well, I trade for Fawcett." It was called Lakota Trading at the time. And he's like, "Oh," and he kind of like, lifts his nose in the air a little bit. And he's like, "Well, yeah, I trade for myself. I got a background. I think his dad gave him money. He's one of those kind of guys." And he's like, "Yeah, I trade for myself." And he's like, "Yeah, see, because you trade for Fawcett, like you have to split your profits 50-50 with them." And I was like, "Okay, yeah, it's not exactly 50-50, but yeah, okay, close enough." And I don't know, like back then I was probably pissed off about it. Now I am old enough where I just don't really give a crap what people say or think. But yeah, I was pretty annoyed with it, but it didn't really take me too much thinking about it afterwards to realize that he was not just a douche, but also kind of an idiot. Because, however much money his dad gave him to trade, I had access to 10 times, 20 times, 50 times more maybe 100 times more capital than him. So if I could trade 10 times as big, but I had to split it 50-50, I'm doing 5 times better. So to me, having access to that capital is just a really great pro. Now, that being said, you kind of have to read the terms of the deal and see what your split is. I sense that these days, I'm going to guess that you're not getting 50%, but that's could still be really, really okay. You also want to look into if there are any extra fees that sort of get padded in there. I know when I worked with Lakota, that was part of the deal. All the exchange fees and commissions and such that I had to pay were a little higher than everybody else's. Not by much, a couple pennies, but at the end of the year, you trade 100,000 contracts or whatever, or several 100,000 contracts. It adds up. So look into that, see if there's any other expenses that you wouldn't have to pay. And if you do have to pay extra expenses, that doesn't necessarily mean that they're a scam either. They could be a very good firm, but that's just part of their business model. And you may or may not still have a really great advantage. Yeah, if you have to pay them to get trained, it's not quite as ideal, but that to me, that's not a deal breaker either. I think with any business, when I first started working on a trading floor, I was working for like $9,000 a year, which, I told my kids about, and they're like, "Oh yeah, man keeping you down. Oh geez, you should have formed a union or something." It's like, no, man, like this is how real life works. When you start, you don't actually have value. You're more of a liability than an asset. So, geez, man, when I first got started in the teaching end of it, I used to write articles for free, just to get my name out there a little bit. Like, that's just how it works. And then once you're established, then you get paid. So I don't know. If you have to pay them for training, question it, do some math, but it might not be a deal breaker either. So I kind of answered all the questions that I think you had here. I welcome other ones in the future. And I don't know if Mark entertains the idea of doing a full episode on it. I don't know. I could probably pull some thoughts out of my butt on this one. I've trained a good number of people to be professional traders back when I was trading professionally, and also through Market Taker, taking people who are good retail traders who wanted to put in the effort, and I trained them to become professionals. So we could probably do a show on it.
Oh, am I welcome to talk now on my own show? Is that allowed? Is my opinion welcome, sir?
Well, yeah, I mean, hey, me and OP, we go
you and
back.
OP clearly bonded, joined at the hip there. I'm just giving you a hard time, OP. I'm not gonna hold your poor taste against you. First off, Dan, I didn't realize you were a faucet guy. So 2 questions for you. First off, did you enjoy your ballooning? And then B, secondly, did you enjoy never being able to buy an option? Because all the faucet guys I knew, if they came back to the office at the end of the day and they had any long position on any strike, they were read the riot act, sir.
I'll tell you what, it's funny. The guy who I really learned option, because I was before accepting the job with Faucet, I was a clerk for like 4 years, 2 years, basically a trader's assistant, shadowing a trader from TradeLink, a guy named Gino in the bond options. And he would never sell an option. He only bought options. And I don't know, my brain clicked with that. I don't know if it was just the training from being around him or if that's how my brain would naturally work anyway. But I got really, really good at gamma scalping. And I was probably the only faucet trader who is always long gamma.
Yeah, you were an oddball then. They must have thought you were a weird unicorn. you were the Bigfoot Sasquatch in the what is this person? Long gamma. What is that? By the way, the love's pouring in on the live chat. Hey, Mr. Dan. Option God says we love you, Mark. Nichols S, we love you. So I'm getting all the love from our pro members. So you know what? You and OP can go have your own fun. I've got our pro people here. So there you go. Nana boo boo to you.
Well, it is afternoon, so they're probably drinking.
Well, some of them could be from Frankfurt, so they could already be drunk. And they're all at the Charlie Horse. All right, now here. Oh, while you were talking, sir, I did go look. I knew we had touched upon this topic in the past. And the most recent episode we did on this was episode 95 from July 15th of 2020. So it's been a while, Dan, coming up on 4 years. We said your questions about going pro, as well as pandemic options trading and more. So we did touch on it there again. Inspired by listener questions. So if you want more on it there, what was it, OP Surfer, then check out episode 95. We also did touch on, and way back, Dan, in November of 2013, we did episode 35, which was lessons from the trading floor, which kind of gets back into what you were saying, the second part of your conversation there about the types of firms and things like that. Maybe we're overdue for one of those as well, Dan. We did lessons from the trading floor, volume 1, in November of 2013. Oh. We've never done a volume 2. So maybe a decade plus, we are overdue for a second tilt at that windmill as well. Yeah, I think I agree with most things, Dan, which is weird, but I agree with most of the things Dan said. A couple of things I would add. You mentioned prop trading. That's very different from the old school delta neutral type of market making that Dan and I used to do. We were discouraged really from taking positions. We were tried and argued and taught and trained to be flat whenever possible. Obviously, it didn't work out that way. You came home every day with residual positions, but you tried to minimize them whenever possible, trading out of things, trading into spreads, that sort of thing. Prop trading, very different. You're taking a position on things. So just be aware of that going in. You can maybe try, some of your function is kind of an old school market making on the bid and on the offer, but also you're coming in there with an axe to grind. So be prepared for that. Also, Dan and I started off in the SPX. I traded SPX. And then when I went out into Intel, I traded predominantly Intel. These days, on most of these firms, you're going to be trading a lot of options products simultaneously. So hopefully any good firm worth its salt will ease you in, start you with maybe one, and then go from there before they just throw you into a bin of whatever, 700 options names and say, go for it. So just be aware of that too. Much more coming at you these days. Dan mentions the paying thing. I would be leery of a firm that said, hey, give us a bunch of money up front. That actually is the old school approach back in the day trading kind of scammy days of the .com boom. A lot of firms are out there and trying to hunt for people and saying, hey, come deposit a bunch of money with us and then we'll leverage it up. We'll give you whatever, 2 to 1, 5 to 1, whatever the case is, on your own money. And you could trade that with us. And then you can get a draw kind of against your own money. Be very, very leery of those folks out there. You don't want to go down that route. A lot of scam firms operated that way, and they're really just there to get that money. And that's it. So be careful for those. Hopefully any good firm you go to will have some sort of legit training program. No firm worth its salt is just going to throw you on a badge and say, here you go. Get out there and start slinging options. You mentioned in your comment here, you're a midlife convert to options. So you're kind of changing careers. So you don't have a lot of experience in this. So you should be looking for a firm that hopefully has good training out there for you. So that would definitely be a big key out there. Also, a lot of the firms we talk to these days are looking more for quants and programmers than they are old school market makers and prop traders out there. So I guess good for you for finding one. Maybe you are a quant, I don't know. But a lot of firms are more looking to develop their algos and have people who can build those and have the algo commit the capital rather than having the trader commit the capital. Back when I was doing it, it was kind of two very distinct arms. You had the developer side and you had the trading side, and they didn't really intermingle that much. And now these days, the developers kind of create the traders and it kind of goes from there. And the trader is not you or I, it is an algorithm out there. So just a couple of things to bear in mind. And also, these things are fewer and farther between than there used to be. When Dan and I started here in Chicago, there were a number of large firms that were very well established that had very well-known trading programs, and you had to fight your way to get in. And as Dan mentioned, you didn't get paid a lot because a lot of people wanted to do this. They wanted to try their hand at it. So by definition, they didn't have to pay a lot for people to come in because they knew they had the prospect of making a lot of money on the other side of that. So something to bear in mind, there are fewer firms that I can think of off the top of my head that are still doing this, that are still really bringing in newer traders and training them up. That said, you do have one benefit. I know some firms that are still looking for people, they do prefer people without a lot of experience. So you have that benefit there because they don't want to break you of any bad habits you may have learned at other firms. So that could be one notch in your favor there, OP Surfer. There's just a couple of thoughts on this. Again, maybe it's time to revisit this in more detail on an episode where my opinion is valued. Hint, hint, wink, wink out there. Intriguing topic, Dan. I know you probably have a couple of traders who've gone pro. Most of the people we see going pro these days, because the tools are so favorable, a lot of them prefer just to be effectively pro retail traders. They come out, they put on the positions, they use their own capital. So there's obviously a downside to that. Hopefully this firm will pay you. So that's a nice thing at least. So you don't have to worry about paying the bills every month. That will at least be covered. When you're trading your own capital, the downside is, well, I have to make a draw out of that every month to pay my mortgage and everything else. So you're going to have minimum capital withdrawals you have to cover just in your regular trading. So that adds a level of anxiety and stress to a lot of people out there that they don't like. So that's why I caution people against that sometimes. So if you're going to go to a trading firm, at least hopefully they are paying you. Hopefully you are trading their capital, not again your capital that you've deposited and they are quote unquote leveraging for you. And hopefully they have a good training program out there. And hopefully they're an established firm. That said, prop firms can be a couple of guys in a room these days. So Dan and I are not familiar with all of them. I'll be nice if you want to reach out and send us, the name of the firm and some of the things they're telling you. We'll take a look at it. We won't read it on the air, obviously, but we could give you our own personal, private feedback. We go that extra mile for our listeners out there. As it's time for Dan to go the extra mile with his question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
And Dan, it's just an embarrassment of love here. It's a love fest on the pro side. So I'm going to go bask in their love and adulation while you hit our listeners with your question of the week, sir.
Okay, I can do that. And actually, it's kind of a funny coincidence when Mark asked me what my question of the week was going to be. I came up with this one before I actually read what the topic of this episode was going to be, and it kind of fits. So the question is, what is gamma scalping, and should I be doing it? So gamma scalping is, and I'll just lead with this, a professional option trader based strategy where you get long options, basically a straddle, though that can be synthetic and there can be short options involved, but basically net long option premium, and you have positive gamma and thus negative theta, paying theta. And what you do is you get delta neutral by buying or selling. The best way to do it is buying or selling shares of the underlying. So you need to be pretty capitalized. We'll get back to that in a second. And when the stock goes higher, because you have positive gamma and you're delta neutral, you get positive deltas. And so you have to sell or short the stock to get back to delta neutral. And then when the stock goes down, you get negative deltas, and thus you have to buy stock to get back to delta neutral. And so they call this gamma scalping, because in an oscillating market, when the stock is going up and down and up and down, you're selling high, buying low, selling high, buying low. And the whole game is to lock in more by gamma scalping than you pay daily on your theta. So obviously there's a whole bunch of other details involved there, but that's pretty good gist of it there, I think. So should you be doing it? And that answer is probably no. If you're a retail trader, your margin requirements, possibly your capitalization and your commission structure is just probably not conducive to making this work out long term. I mean, you could be getting long or short a couple $100,000 worth of the underlying stock, not because you're taking a directional position on the stock, because you're trying to get delta neutral on it. And so, I mean, you just need massive amounts of capital to make a few Vega points here or there, and or gamma scalping enough to cover your theta. I mean, it's a very, very difficult game for a retail trader. And I have trained 3 of some of my top retail traders to gamma scalp, and none of them could make it work. One of which was legitimately a rocket scientist, like, hand God, an actual rocket scientist, and he could make it work. So it's not that you can't figure it out. It's not that hard, but you've just got too much wind blowing in the opposite direction. It just makes it really, really difficult. Now, all that being said, I still do teach gamma scalping in some of our classes on at least a superficial level, because I think that it helps you understand how volatility works on a very, very deep level, which is essential for all traders, retail or not.
Yeah, I would say that's one of the things that really broke me of technical analysis back in the day, Dan, was trying to use it to figure out my levels for my gamma scalping, right? Because you're right, on a slow day, that's 99% of what we were doing down there. We were scalping the gamma, scalping stock. So figuring out the right levels for that. I never really found a good intraday technical analysis platform that really kind of worked for me, and that kind of disabused me of my love for technical analysis out there. Maybe it's time to reconsider that. I don't know. I know you like a little technical analysis a little more than I do out there, but you're right. It is challenging. We talked about it before here on the show. If you want a deeper dive, listeners, the most recent episode Dan and I did on this exact topic was Options Bootcamp episode 102, entitled, appropriately enough, Gamma Scalping for Beginners, from September 2nd of 2020. So go check that out if you want a deeper dive into all things gamma scalping. All right, Mr. Dan, that music means we come to the end of yet another episode, another double header out here. Mr. Dan, I'm going to be heading down to OIC next week during our usual recording time. What are you going to be up to during our usual show time next week? And where should our listeners go if they want to perhaps reach out to you during said time or any other time?
Well, next week is a big week because we are right now holding some online trainings on our earnings trading system, and we are actually trading it live next week with folks who joined the class. And we're all going to actually trade my earnings trading system, total earnings domination, together every single day next week in the afternoon. If that's something you're interested in, I do have 2 more live trainings this week. Go to markettaker.com, click join free. That'll put you on our list to get an invitation for one of the free trainings. And you can see what it's all about, and maybe you can join us next week.
There you go. Hit them up, markettaker.com. Don't forget the second T for Theta. Don't forget our friends over there at Public as well. Kick the tires and light the fires. Let us know what you think. Let us know about the rebate. It is certainly very intriguing, I know, to a lot of you out there. And also, again, good to see new players well-capitalized, decent-sized players coming into options again. Always good, refreshing to see an influx of new blood on the broker side. When they all get gobbled up and things get a little stratified out there, we like to see new blood shaking it up out there. So at the very least, go hit up Public, let them know you heard about them on the network and that you like that they are supporting fun shows like the old OBC. And of course, if you want to support the show with some of your own questions or comments or suggestions or listener topics, even if they are as wildly biased as OP Surfers this week, I'm just kidding. Send it all in, even if you have inexplicable love for Dan. We'll let you all air on the show. As long as you're pleasant and popular, don't get a little too fired up out there, questioning Dan's manhood like last week, then by all means, send them in over there at optionsquestions, theoptionsider.com. That all works. And of course, if you have detailed questions, you want to join our pro Q&As, only one place to do that, theoptionsinsider.com/pro is the place to go to learn more. That's going to do it for us on the network today. By the time you're hearing this next week, I will be in the middle of OIC, but you will still get your double dose of content coming up on Thursday. Tomorrow, of course, when you're listening to this, you'll get This Week in Futures Options. Maybe this time next week, you're going to get a live episode of the Option Block with me from OIC. Maybe I'll have the Flow Master joining me in the same room. That'll be fun. As well as Friday, of course, Volatility Views and Options Oddities. I will be back in studio, I do believe, next Friday. Back from Asheville. Of course, if you want to hear all that fun for yourselves, you should be listening to the full network. That's where you get all those other great shows. It's more than just OBC here on the network, listeners. Then we're back again, same bat time, same bat channel next week. Another episode of Options Bootcamp. Stay safe out there, everybody.
Check out public.com if you want to literally earn money to place options trades. There are no commissions or per contract fees. And Public gives you a rebate of up to 18 cents per contract traded. Discover why NerdWallet recently gave options trading on Public 5 out of 5 stars. And start paying less than $0 to trade options. Only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures and podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.